Hello everyone, this is Professor Srinivasan here, back again with yet another video on finance. Well, sorry for the clickbait, the title of this video, which says that Bank of Japan literally owns the stock market. Well, that's partly true. The Bank of Japan does not literally own the stock market, but it is so heavily invested in Japanese stocks through its purchases of equity traded funds listed on the Tokyo Stock Exchange that it practically owns the market. The Bank of Japan owns 7% of the total Japanese stocks. Now, why would a central bank do that? Let's break it down. Since 2010, as a part of its monetary easing policy, the Bank of Japan has been consistently buying equity traded funds of Japanese stocks listed on the Tokyo Stock Exchange. By March 2021, Bank of Japan held almost 22 trillion yen of Japanese stocks, making it the single largest holder of Japanese equities. In fact, you would be surprised. Bank of Japan is the single largest shareholders in some of the companies like Toyota, Sony, etc. Instead of printing cash, Bank of Japan just buys equity traded funds listed on the Tokyo Stock Exchange to push up the prices. If stocks go up, people will feel wealthy and they would tend to spend, or at least that is what the theory goes. But there is a catch. Bank of Japan buying stocks to push their prices up tends to distort the markets. Companies do not need to perform well for their stock prices to go up. Bank of Japan is doing that job for them. And that is why sometimes this market is called as a zombie market. The US Fed and the ECB avoid this tactics, or at least they have avoided till now. But who knows? Another financial crisis and maybe they would also adopt this strategy. What do you think of it? Do you think Bank of Japan is doing the right thing by propping up the share prices? Let me know in the comment section. If you found this video useful, like it, share it, and do not forget to subscribe to my channel. Ciao.